I know today I had said we're gonna cover 2 lessons, but let's just
Mm-hmm.
stick to one because there's something I need to work on later after this class.
Mm-hmm.
So I don't know if you're gonna, because I told you in advance, maybe I will be inconveniencing you. I don't know, but
Mm-hmm.
you can tell me if we can, the second class, we can do it tomorrow or we just move it forward to next week. I think you're the one to decide on that.
Okay.
Yeah, because I have to finish up with my client
Mm-hmm.
today. So I may not have enough time to like cover everything I'm supposed to, because I need to finish this class and then now start working, and it may take like 4 hours or 5 hours. So I don't know
Mm-hmm.
if tomorrow you'll be free, or we just push it to next week. So you'll just tell me by the end of the lesson. So
So I'll tell him.
okay, I sent you some of the notes. So I'm not yet. I'm remaining just 2 classes. This one I've already posted it in the blog. The 2 classes I will send you them to you. The video, hey, hata kama uliniambia the 2 hour video sijapata time ya kumalizia kuedit. I'm finishing up. I think I'm remaining 45 minutes to finish editing. So I will post it in the course of the day. Sawa?
Sawa.
I have been busy. A girl has been busy. I am sorry.
Busy is good. Busy is good. Secure the bag. Hi.
Yeah. It's just that I wanted to clear that so that you don't think we alinisahau na venye a lot of work came up. So yeah. So okay. So today we're gonna cover market structure analysis. Let me share my screen. By the way, did you get to practice?
Once in a while. Okay, this let me say this morning. I have been looking at trading view.
Mm-hmm.
Yeah.
So did you get some setups here and there?
I did. But I'll still listen to the class again.
Yeah. I will send you the link for sure. I think it will help you, because even the
So,
notes that I'm putting out, I've summarized most of them. I'm summarizing them so that
mhm.
I just need the talking points instead of all those explanations. I think the video will be better for that, and then so for the notes, it will be just
Yeah.
talking point, like it will be just a summary. Okay, so we'll try both of them. By the way, the previous class, so far what we've learned, all of it will be tied up to now. And today's class now will be a benchmark to next class, which is Fibonacci. And
Mhm.
I want you to really understand this, because it will make everything, like it will make sense of everything we've discussed so far. So
Mm.
market structure analysis, basically, I don't know if I'm recording, by the way. Mhm.
Yes, we are recording.
Recording. Okay. So market structure analysis. Now there's a term called trend, because market structure helps us to identify the trend. So I don't know if you've ever asked yourself, okay, what's the difference between market structure and trend analysis? They may almost have the same meaning. It's like supply and demand and support and resistance. Potato, just that they mean something different, but in hindsight, like they have a very huge relationship. So trend analysis is the foundation. It tells you the basic direction, that is up, down, sideways. So this is an uptrend, a downtrend, then this is a consolidation or a sideways trend. So market structure analysis builds on trend analysis. So the trend analysis is simple explanation. Then market structure is not the advanced explanation of trend analysis, and it adds these crucial layers to it. The why price moves, that is liquidity and participant behaviors, where it moves to likely to start, okay, where moves are likely to start and end, that is support and resistance from structure. And then when trends might change structure, breaks and pattern completion, and then how to time entries and exits precisely. That is impulse correction, impulse correction. We're gonna cover this later. So the relation is just that market structure analysis contains trend analysis but goes far deeper. So it's a bit more advanced. That is the only difference. While trend analysis shows direction, structure analysis reveals the market's blueprint, the underlying mechanics that drive price movement and create higher probability trading opportunities. So I know you've heard this phrase, the trend is your friend. So shaiskia somewhere, the trend is your friend.
Yeah, yeah.
Yeah, so at the end of the core, now, okay, from the previous classes, you're building up. Now we started from the basics, then we learned how to use the technical analysis tools, then we went to candlestick patterns, then we went to support and resistance levels, and then now at market structure analysis, you are trying to learn about the story now. The story now is becoming a real story, like whereby we are looking at the what is it? The mechanics, the like the blueprints. Like tunaanza sasa kuona vitu sasa zikimake sense. So when it comes to market structure, the advantage of understanding these mechanics, which is the trend, because the trend is your friend, how to be on the right side of the trend, it's very important because it will help you have high probability setups. I know candlesticks nilikwambia it will need support and resistance. Then support and resistance, it needed liquidity to help it become better. And we saw even in practice that it was giving us high probability setups. And now trend analysis and market structure is going now to cement all that and give you confidence, and you're gonna see like the you're gonna choose the better, like utajipata tu choose the better options, because even when you identify support and resistance level, they may fail. So when they fail, like market structure ndio inakujanga inakusaidia kuona, oh okay, market structure imechange, you are now out of the uptrend market, you're going now to the downtrend market. Now I'm gonna reference one of the communities that a trading mindset called ya smart money concepts, akina ICT, but akina ICT wako ndani ya smart money concepts. Wanasemanga break of structure, change of character, sijui nini. I'm saying that because I remember you wrote it in your application, that cannot section. Then I told you I don't do all that, but it's in relation to that. Nakumbuka the very first time I told you, ulikuwa umesema kitu kuhusu nini, smart money concept, nikakwambia mi si trading hiyo design. Nakumbuka?
Nakumbuka ya.
Yeah, so hapa ndio sasa hizo vitu kama change of character, break of structure, hizo ndo zina playing hapa. So after this class, maybe if you find interest in now looking at smart money concepts, unaweza enda tu kuangalia in that direction, but me I'm going to give you from the point of view of price action, basic price action, because remember I told you I'm a price action trader. So hizo zingine ni the same, ni venye zinakuwa tu na different wording. So but usikwe jujuli mention hivyo kwa nini yako. I just wanted to clarify it's the same thing. Akina break of structure, order blocks ni kama support and resistance na supply and demand. But sasa change of character, break of structure, hizo najua they borrow from price action trading. Now just know that itatupea the better probability, because you're gonna see this support has failed to be support again. Remember I told you about support and resistance flip. when they flip. I told you it's a bit more advanced, but it's gonna make sense now in this class very well, because your support and resistance flip. When support stops to be support and it becomes resistance, now it forms the basis now of market structure. You're gonna see it. I promise you're gonna see it. It's gonna make sense, and it will be now the beauty. Ndio maana nilikuwa nakwambia understand price in terms of market structure, for you to make sense of the to make sense of the support and resistance levels, it's gonna be easier, cause unaweza shikilia a support and resistance level expect trades, but that move is way gone, and then price tends to create a new move, a new support and resistance level, hivyo. So it's important to understand market structure. So core concepts called the Trinity of market analysis. I normally say, kuna echo. I don't know why. Must my mic. Okay. Uh,
Vizuri.
okay. So the Trinity of market analysis, I normally say, because I'm trying to help you build an edge. I have an edge. Every successful trader needs to have an edge. An edge inakuanga ni the special thing, the special sauce that makes you profitable in the market. It's a combination of different maybe strategies, different trade management skills, different psychological skills, different risk management skills, all combined. They can be like 5 to 10 rules that you put in place to ensure that I am stuck on that. Nikienda kwa market naenda kutafuta exactly that, enter, do. That is what we are calling an edge. So for me, the Trinity of market analysis, that is my trading edge, whereby I use structure, which is market structure, then support and resistance, and then liquidity. So I enter with so much confidence, and God helps me, and we normally get a good a good risk reward first of all, and then a good win rate. So yeah, so that's what it's called, an edge. So market structure, tuanzie na market structure, it provides the roadmap showing market direction and sentiment through price patterns, and then support and resistance at the memory levels where buying and selling pressure historically merged, and then liquidity is the fuel where stop losses, pending orders, and large positions wait to be triggered. So I combine all these three things. The last two, support and resistance and liquidity, covered it previously. Now we are talking about market structure. So how are they working? How do they work together? Structure shows us where market is going. Support and resistance show us the key levels to watch, and then liquidity shows us why price moves and how far it might go. Any questions up to there? I've not yet entered into market structure, but I just wanted to see to see how they tie in together, the three of them, because these three alone, even without using any other strategy, I'm gonna use this just as they are. Actually, this is what I normally use if I'm doing discretionary trading. Discretionary trading is trading now the way I can trade without an algo. So I can choose to rate an algo or buy an algo and let it trade, but not discretionally is me going to the market, placing the orders, deciding, analyzing. So this is my main strategy. Yeah, so I use these three. Support structure, first of all, I need to identify where the trend is, that is where is market trying to go. Number two, I map out the key levels, and then number three, I look at liquidity. So those three formulate my edge. It's called now an edge. So after market structure, there's something we're gonna talk about later. It's Fibonacci retracement, but it is I normally like to teach it separately because it's a whole new strategy, a whole big strategy, but it is inside market structure. So Fibonacci is not at when we'll get to Fibonacci, just know it's part of market structure, but we're gonna have a separate lesson because it's huge and long. We're gonna have like maybe 1 hour, 30 minutes just discussing it on itself for you to understand. But just know it's part of this strategy. So I combine these three when I'm trading. So do you have any question maybe so far? Any kind of thing I may need to clarify?
So wait, so when you talk of that trinity,
Hmm.
do we assume that we also include the trend analysis is also within the market structure?
Yes, the trend analysis is okay. Trend analysis is the same as market structure.
Okay.
Just that unakumbuka venye nilikuwa na kuexplainia support and resistance and supply and demand, they are the same. It's just that one tells us
Mm-hmm.
the reason, and then the other one tells us the levels. So what we see on the
Mm-hmm.
chart is the support and resistance, but behind that support and resistance is the supply and demand. So in this case, the
Mm-hmm.
difference is the structure, sorry, market structure is there. It gives us the direction. And then the what is it called? The trend. The trend now shows us the direction. Okay,
Mm-hmm.
let me just keep go. Okay, have I answered you kwanza? Ama
Yeah, yeah,
nimekucomplicate ya? Aya, sawa. So
exactly. Yeah.
okay, so most frequently asked questions. What exactly is market structure and why is it important? Market structure is the sequence of highs and lows revealing market direction and sentiment. It shows who controls the market, whether buyers or sellers, where it is likely to go, and when trends might change. It's the foundation of successful trading. How do I identify significant highs and lows? Look for low levels where price reacted strongly at round numbers. Nakumbuka round numbers tukiongelea, or where multiple time frames align. The the more times it's tested, the more significant the level becomes. Okay, hizo ni highs and lows, then tutakuwa na swing highs and swing lows. Hizo tutakuja kuongelea later, but highs and lows ni to support and resistance. That's what it means. What's the difference between trend change and pullback? Trend changes break the sequence of higher highs and higher lows uptrend, or lower highs and lower lows downtrend. Pullbacks maintain overall structure but retraces temporarily. True changes need volume, momentum, and multiple structure break. So what it means pullback ni retracement. Sasa this is where Fibonacci retracement it's gonna you're gonna see it. Let me just finish up on this draw there 5 only, and then we start going through. Why do structure breaks sometimes sometimes reverse? Why do structure breaks sometimes reverse back? These are called false breakout or stop hands, where smart money triggers retail stops before reversing. Markets often clear liquidity above, below key levels before making real moves. So hii ndio nilikuwa nakwambia, liquidity is grabbed at this level. So you're gonna see, when do I make sure that okay, that impulse move ama hiyo move yenye imekuja na volume, it is really gonna help us now take us to the next level of market structure. Kama ilikuwa higher high, if it's gonna take us to the higher high, if it's lower low, if it's gonna take us to the next lower low, you're gonna see it. How do I know when structure truly shifts? Look for break of significant swing levels, new high highs and lows in opposite direction, multiple time frame confirmation, volume momentum. Sana sana angalianga volume and momentum confirmation. You don't need the volume indicator. You can just see a candle. I'll show you how to see a candle has volume, and then wait for confluence. So now let's go into each of them. There are normally three. There's an uptrend, a downtrend, and a sideways structure. So the uptrend, market normally forms higher highs, higher low, higher high, higher low, higher high, higher low. higher high. Umeona?
Mm,
So this is a swing point. This is a swing high, swing low, swing high, swing low, swing high, swing low, swing high. Sindo? Higher. We can also
mhm,
say this is a resistance, support, resistance, support, resistance, support, resistance. Sindo? Higher. Now,
mhm.
you remember when I was telling you a level when it is broken, like this resistance here, it was broken. It was a resistance level. And then a candle price goes and breaks it. And then when it comes back to retest it, this level now stops becoming resistance. It becomes support. You remember that point I told you and I showed you last time?
Yes,
Yeah. So
yes,
this is what you are calling an SR flip, a support and resistance flip. So it's basically SR flips normally help us to know that market has changed, like sorry, like it helps us to support market structure. So that's why I was telling you it's a bit advanced for especially for beginners, but it is a very good thing to understand because it's gonna help you make so much money. So for example, when you see this trend has, for example, if this one was broken, it goes up and then it retraces. Now this one, now this retracement now and coming back here, this is a Fibonacci level, this is a Fibonacci retracement level, and so on and so forth. Now this is also a Fibonacci retracement level. So this is what we are calling an impulse correction, impulse correction, impulse correction, impulse. I'm gonna mention those like impulse correction, impulse correction, impulse, like that. I want you to understand those terms. I've mentioned several terms here, and I wish you can understand them because they mean one of the same things. Okay, so if
mhm,
I say a pullback is also called a correction or a retracement. Sawa sawa. And then an
mhm.
impulse correction, pullback, retracement, impulse correction, pullback, retracement, like that. So I hope you've seen how the uptrend looks like. So an uptrend forms high highs and higher lows. High highs each peak higher than previous, buyers paying more, means buyers are paying more. And then higher lows is each valley ini each peak higher ama each swing high than previous. In any each valley higher than previous ama each swing low higher than the previous by stepping in earlier. So characteristic rallies strong, the rallies are stronger than pullbacks, thus increasing volume on advances while going upwards. Same case with downtrends. Downtrends go forming lower lows and lower highs and lower lows. Each peak lower than previous, buyers weakening, and then each valley lower than previous, sellers gaining control, and then it is characterized by declines stronger than rallies, increasing volume on drops. So volume continues while price is going down, volume keeps going down. So it means that the bears are in control in this market. So you can see, sorry, this is a mistake. Sorry for that, it's a typo. So lower low, lower high, lower low, lower high, lower low, lower high, lower low. So correction, impulse correction, impulse correction, impulse correction. So this is what had been formed first, and then break. We got a break here. Sorry, as an SR, sorry, a support flip. Support stops being support, it now becomes resistance, which you can see here now, and then it goes on and on and on. Now let me show you the final one, which is a sideways ranging structure where we have equal highs and equal lows. So this is forming a channel whereby we have like just like the definition of support and resistance. This is the floor and ceiling, so it just goes shoop shoop shoop, but it doesn't always come works like this. This shows indecision. So either thing can happen. Price may come here and push upwards or downwards. So here we are not sure. So we normally prefer not to trade in this market. Many traders prefer not trading in this market because they are not sure where price is gonna go. But at least this one we know chances are just one trade can help us know if there is a break or not. Have I made sense up to there?
Yes.
Okay, so equal highs and lows, horizontal support and resistance levels. Neither buyers nor sellers is in clear control. Breakout potential, energy building for eventual directional move on either side. So support and resistance born from structure. How structure creates support and resistance, swing highs, that is resistance, swing lows, that is support. So sellers previously emerged with force, blah, blah, blah. Let me not dwell on this one, or let me just mention. So the psychology behind swing highs is sellers previously emerged with force at these levels. Then the memory part, remember ile word nilikwambia, lazima ukumbukange. Remember inamaanisha the market no always remembers, like it remembers the past. So market remembers where selling pressure appeared, and then liquidity, stop losses, and buy orders accumulate above. Okay, and then swing lows the opposite. Buyers previously emerged with force at these levels. Market remembers where buying pressure appeared, and then stop losses and sell orders accumulate below. The SR flip concept. When resistance break cleanly, it becomes support, and when support breaks cleanly it becomes resistance. Nimetoka kuonesha tu hapo juu, support and resistance flip. So this happens because trapped traders are now underwater. Wale traders wako wametoka, they are now facing losses, psychological shifts as the market sentiment changes. So the venye tu sisi tunafikiria idea yetu sasa ina change, because you need to change, keep changing. Don't dwell on one position ama one idea. The market will tell you now it's time to get out. So kuna wale watu wameshikilia juu, they emotionally attached to their trades, but then I want you to have that, to be used to changing your idea once the market tells you now it's time to change. I'll show you in one of the charts, because it's clearly nilikuonesha tu last time actually from the previous class, tutaiona tu in trading visa too. And then technical significance, it represents control shifts from buyers to sellers, and then higher volume often accompanies successful flips. So I'm going to show you again how to know, like a candle can show you, hey, there's so much volume in this movement. Yes. So quality breakouts, clean momentum, volume confirmation, no immediate retest and follow through. Weak breakouts, hesitation, especially a week, low volume, immediate reversal, and then lack of conviction. So our goal is to look for quality breakouts, not weak breakouts. Higher liquidity, the market's hidden engine. Oh, time is not on our side. Time is not on our side. Okay, what is liquidity? Orders waiting to be flipped, stop losses, pending orders, institutional position orders concentrated at predictable locations, either support or resistance. Types of liquidity. We have liquidity above, which is buy side liquidity, but buy side liquidity ni a smart money concept. Sisi tunaitanga tu liquidity above. So above resistance, location above swing highs, resistance ama round numbers at resistance. Composition ni hizo tu, breakout orders, short stops, buy stops, blah blah blah. Creates upside pressure when triggered. Liquidity below, same case. Below swing lows, support, round numbers, long positions, sell stops, and breakdown orders at the composition of such orders, and then impact is they create downward pressure when triggered. Now let me clarify this. The reason why liquidity is important, it's because even in those reversals, even in those retracements, every time there is a reversal in the market, liquidity normally presents itself. That's why I'm telling you, kuna kwanga na liquidity everywhere. Nilikuwa nakwambia jana kunakuwa na liquidity everywhere, even in these levels, whether inakuja impulse correction impulse, hapo kwa impulse bado kutakuwa na liquidity, hapo kwa correction, hapo on the swing high kutakuwa na liquidity and so on. So liquidity itakuwa always there. That's why I'm adding it and tying it into this. So why buy side versus sell side liquidity? That's something I would like for you to go and read, because buy side and sell side liquidity inakuanga in smart money concepts. Mi niliada hapa juu ilikuwa inani confusing. Tuko kwa resistance, mbona tunasema buy side liquidity, na tuko kwa support, mbona tunasema sell side liquidity? Does it make sense? It's a bit confusing because there's I didn't mention in the previous class, but the liquidities have their names. Kuna hiyo buy side na sell side liquidity, but to simplify for you, tunasemanga kuna liquidity above and liquidity below. So nikisema liquidity above namaanisha buy side liquidity, nikisema liquidity below namaanisha sell side liquidity. So the confusion inakujanga
Do you mind explaining that point again?
yeah. So okay, I was saying
Mm.
when I was a student, when I was learning, I was always confused why people are saying, because these liquidities, they have a name. Like at support zinaitangwa they are called sell side liquidity. At resistance zinaitangwa buy side liquidity. So nilikuwa najiuliza mbona watu wanaziita hivyo, yet at support you are supposed to buy and at resistance you are supposed to sell. So the confusion I'm trying to clarify for you. If we sell at resistance, why call it buy side liquidity? And the answer is the names refer to what type of orders sit there, not what you do as a trader. So for example, liquidity above, which is buy side liquidity and it's at resistance, short traders stop losses are lying there. Watu wenye wana short stop losses zao ziko hapo, so they must buy to close position, to close shorts. Haya, pending buy orders from breakout traders, so kuna watu wanaweka buy orders hapo, and then when triggered, all these orders create buying pressure, and then result is price shoots up because of all the buy orders executing. So what it means is, haimaanishi juu hapo kwenye kuko na hiyo buy side haimaanishi kwenye liquidity above ikiwa hapo juu, hata kama ni resistance tunajua inafaa kushuka, haimaanishi ati tunafaa kuita sell side liquidity. Ni kwa sababu hiyo place yenye inaitangwa buy side liquidity, kwa sababu the type of orders zenye ziko hapo at resistance zinafanya price imove upwards. Umeget? So zina trigger, instead ya kwenda chini, zina cause liquidity, zina cause price ipande, hence creating buy side liquidity. Has it made sense?
Yeah.
Yeah, so the reason why zinaitwa hivyo ni juu the causation, not they are causing. They are causing the market to price to go upwards. So that's why they are called buy side liquidity, and then opposite for the sell side liquidity. Haya, so but you can go and read more on this. Ziko hapa kwa notes. So key point, you might sell at resistance as a trader, but the liquidity above that resistance consists of buy orders waiting to be triggered. The liquidity name describes the order type that accumulates there, not your trading action. So advanced pattern, that is impulse correction impulse yenye tulikuwa tumediscuss earlier. So impulse moves, trade with this. So definition, strong directional. Okay, let me just define what impulse is, and then I think we'll be done if I'm not wrong. So impulse move, strong directional moves. Tumebakisha 3 minutes. Okay. Strong directional move creating new extremes with momentum, characterized by fast, clean, decisive movement in trend direction. And then volume is higher and then strong conviction, and then the trading, the main profit generating moves. So note that the impulse moves are the ones that are making the money here. And then the correction used for entry timing, slower retracements against main trend, choppy overlapping, less decisive, lower volume, profit taking, entry opportunities for the next impulse. So let me go back, for example, in one of these moves, this one. So this impulse move is the one that is making money. So if you enter here, so if you, there's a trader who will say, okay, price imekuja hapa imenipea ka signal kako short, but this move won't be profitable compared to this move. So kuna trader ameeka sell yake hapa at resistance. Remember, this was resistance and then this is support. And then kuna trader atakuja later akuja eke trade yake hapa after amepata Fibonacci retracement. So huyo wa Fibonacci retracement atapata a very high move, lakini huyo atapata a very short move, of which anaweza pata like 1:1, 1:0.5, yani it is detrimental for them. So it's better to wait and then ride this whole move. That's what that means. Has it made sense?
Yeah.
Okay, good. So
Mhm.
correction moves nisha explain. So pattern recognition, so is important, the waves si important sana. Your eyes can train, you can train your eyes to see them, and also practice. Vitu mingi hapa zinahitaji a lot of practice, experience too. After trading like 100 times zitakuwa like at the back of your mind, you don't need to worry about that. And then the time relationship, corrections take longer, impulses are faster. So utaona corrections zinajikokota, but impulse moves zinaenda, unaona candle kimeenda shup, another candle inaifuata shup, another candle inaifuata shup. So that's what it means as impulse. And you'll see if you're in such a trade, you'll be like, hey, hii trade hata ijamaliza nini na venye nimepata hii pesa yote. So that's it. So Fibonacci now comes in because corrections often retrace at Fibonacci levels of the impulse move and then creating new impulse moves. Now, equal highs and lows, formation and significance. Equal highs, multiple swing highs at the same level, balance between buyers and sellers, less than 1 minute. Orders accumulate above, stops, breakout entries, and then more tests equals stronger levels. But remember, they will be broken. And then equal lows, multiple swing lows at same price level, and then balance between buyers and sellers, orders accumulate below stops, breakdown entries, and then more tests, stronger level. So class inaenda kuisha, so see, we will wait for the next class so that we finish up and I go to the chat. Sawa?
Sawa.
And then if you have any questions, maybe nimeongea haraka haraka, you just tell me.
Mhm.
I will clarify in the next class.
Okay, no worries.
Aya, sawa sawa. So see you in the next class because tumebakisha tu a small portion and then we go to the chat now.
Okay, good. All right.
Okay, bye. Let me get the notes. Okay, so let's finish up and then we go on to the trading view and practical example.
Mhm.
Okay, so trading consolidation breakouts, the one that I was telling you, these ones, equal highs and equal lows, how to trade them. So to get high probability characteristics, you need volume, confirmation on break. We need clean momentum without creating pullback, and then multiple time frame alignment, and then clear liquidity trigger activation. So what I mean is this: when do we know what to trade or to enter? So if we see a market has been ranging, if a market comes and maybe it was going upwards and then it has a very, very big momentum candle or a big bullish candle, you know that you start looking for a buy opportunity in the lower time frame, like the way I showed you, support and resistance. Same case with this other side. So that's what it means. You just need to see a move, a big momentum move on either direction for you to know that it's a trend from, because price won't stay there for forever in a consolidation. It will just decide, okay, let's go with an uptrend or a downtrend. So let's see our framework integration. So first of all, how do we go about it? The first thing we need is to have structure analysis, identify trend on higher time frame. In our case, it's 1 hour time frame. We'll go to the 1 hour time frame and identify the trend there. But you can start with the daily, you can start with the hourly. The one that I encourage people to use actually is the 4 hour. I find 4 hour giving the best clean trend movements. So you can also focus on the 4 hour time frame and then go back now in the 1 hour time frame. But for me, since I like doing everything, my trend and support and resistance on one time frame, I pick the 1 hour time frame. But 4 hour is actually good. But remember, if you are analyzing on the 4 hour, you need to enter your trades in the 15-minute time frame. Sasa.
Sawa.
So mark significant swing highs and lows, draw trend line and structure levels, and then determine market phase, that is trending, consolidation or blah blah blah. So what it means is ukienda kwa hiyo 1 hour ama 4 hour una identify your trend, una mark swing high, swing low. Market imekuwa ikiform swing high, swing low. Is it higher high, higher low, higher high, higher low? Kama ni higher high, higher low, jaribu ku connect trend line, but I skip that. I normally skip that. Me, I just identify higher highs, higher lows. You can write down ama label them ama just use your eyes, and then next thing you just write this phase is the market phase right now is a trending market, an upward trending, downward trending, ama a consolidating, ama ranging phase. So that's the first step. Then the next step is support and resistance identification. Now you mark venye tulifanya saa last time, you mark key levels created by the structure, identify confluence zone, and then assess. This is not important for now, this confluence zone, just do what we did. So assess level quality and then note reasons, support and resistance flips. So what I would encourage you to do in this level is just know the key level and then create your zone. Alafu sasa I think you'll be ready to go. And then sorry, and the third one is identify if there is any support and resistance flip, SR flip. I told you it's a bit advanced, so yeah, it will still be advanced, just that right now, even if we are trying to employ it, I think you need more practice for that. And then the third thing is liquidity analysis. Identify where orders likely to sit. Look for equal highs and lows, that is accumulation, and then anticipate, stop, placement areas, plan for liquidity hands. So hapa ndio sasa unaanza kufanya trade management. Swing highs zako ziko wapi? Stop loss zako ziko wapi? Take profits zako ziko wapi? In case ukue ni wapi kunafaa kuwa na liquidity hunt in case of anything. And then finally pattern recognition, identify. So hii pattern recognition inafaa kukuja hapa juu kwa structure analysis, but just mark identify impulse correction, and then look for breakout preparation patterns, assess momentum, very important. Momentum candles zinasaidianga sana kujua a breakout has happened, and then plan entry timing. And then finally, now you can execute, enter with structure, bias alignment, use SR for a precise timing, support and resistance for a precise timing, then stops beyond structure. Did I record this class, by the way?
Yes, we are recording.
You are recording the class?
You are.
Okay, good. I have to remember that. No.
Mm.
I have PTSD from last time. Anyway, so uh, stops beyond structure, liquidity levels, and then finally target next logical structural level, which is the next swing high, ama swing low. So so for maximum edge setup criteria, like to create a, which is you're gonna create it, you're gonna choose what to add, what not to add. So when you're creating your edge, so you need structure, alignment, that direction matches trend. You need support and resistance confluence, especially multiple factors at the same time. So confluence in involving is so many things, like three things. So you can have trend lines, you can have all those things. So it is up to you to choose which confluences to use. Liquidity consideration, understanding order placements, pattern confirmation, clear impulse correction or breakout pattern, volume confirmation, increased supporting activity. That is, it can be a very bullish candle or a very bearish candle, big bearish candle. Multiple time frame alignment, same setups across time frames, but I told you this is going to confuse you more if you use multiple time frames, because you'll have analysis paralysis, something whereby
Question.
mhm,
Mhm.
you overanalyze
So,
and then
mhm.
you become confused. Endelea kuuliza swali.
Okay, sorry. For this specific class on market structure,
Mhm.
is it something that can be applied to both like day traders, swing traders, long-term traders? Do these principles apply across the board, or it's more specific to day traders?
Now it's everyone, because uh,
Okay.
let's now, I think it's the high time we go to the class, to the chart. So everyone can use support and resistance, sorry, market structure, because it's the backbone. The bread and butter is support and resistance, but then the backbone, like it carries, it shows the trend. Every trader, whether a day trader, whether a swing trader, whether an investor, they want to see, to go with the trend. So what is going to help us understand the trend? It's normally not support and resistance. It's normally market structure analysis, because we want to see higher highs, higher lows, higher highs, higher lows, lower highs, lower lows, lower highs, lower lows, equal highs and equal lows. That's what it means. So for example, this is the Bitcoin chart. This Bitcoin chart is the same one that we were analyzing previously. I think even in the previous class and the other class before that. So for example, in this market, this is the 1 hour time frame. If I go to the 4 hour, I remember I told you that 4 hours normally give us, it usually, for me, I found it to be perfect when it comes to identifying the 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 structure. Let me just take you back to a chart you've not yet drawn, a chart like this one. So like Euro USD, right? Euro USD, in this point in time, could you tell us which time frame it is? Sorry, which phase it is in? If we just look at it.
Upward trend.
Yeah,
Oh,
good.
now.
Right
Yeah,
now,
yeah, yeah, upward.
from yeah, actually you're right. Up from now up to from 25th August to, sorry, to 14th August to now, it has been in an upward trending, but at this point in time we are in a consolidating market.
Okay, okay.
Yeah, because you see, okay, it doesn't matter if it weak, si lazima ikuwe at an equal market, an equal high and equal low should be exactly the same. So kama hapa, I think I would need a parallel channel or something, but you get the point. So this lows,
Yeah.
market imenini hapa, and then this highs, okay, hata kama haijanini exactly, but it is almost, so it is kind of ranging. And then the ranging market doesn't have to be exactly precisely level to level. Sometimes it is there in the middle, but normally it does the touches. So it touches one edge and the other edge. So it's still in a consolidating zone or arranging zone. So for example, this is a consolidating market. From somewhere here, it has been consolidating there.
Okay.
So if I give you an example of a gold, let's look for a gold that has not yet been touched. We've not yet analyzed. Let's see commodities. All Zao USD. Zao USD. Something we've not yet touched. Let's take this one for Paperstone. So here it is. I want you to see like a chart, like, okay, good. So now this one, it was consolidating up here. It was consolidating somewhere here, but now it is in a downtrend. Right now it was in an uptrend. So now let's look at one more BTC. I don't know if I have an extra BTC one. I want to see the trend for BTC as well. So let's remove something like JP Morgan. Sorry, let me remove this so that I can add BTC, a BTC chart. BTC, USD, let's add by bits. Copy by bits. Ama yoyote. Crypto.com, wacha tuchukue crypto.com. So here we have gold, nini inaitwaje, BTC. So BTC now is offering us, haijatupea consolidation for a while, but imetupea an uptrend and a downtrend, sindio? So because this is an uptrend and then this is a downtrend. So I think this is a perfect one to analyze with you because it shows, it gives us a clear uptrend and then the break now, how it changes to become a downtrend. Higher. So this is a low, this is a swing low. This is a swing, not this one. So this is a swing low, swing high. For this one, it will be here because it has to break this. For a market structure to change, it has to break this. Let me use a line so for you to see. You see, this is support, resistance, and then this is support because this is a swing high, a swing low. So this is an impulse move, and then it came, it corrected. Sorry, it was an impulse move. Sorry, let's start here and get confused. An impulse move, a correction, an impulse move, but it didn't nini kabisa. So it's an impulse correction, impulse ilifika hapa, because you have to see that this one was broken immediately. An impulse, a correction, and then an impulse move, of which it came all the way up here because it didn't retrace back down, and then a correction, and then a final impulse. If we take an arrow, where is that tool I normally like to use to show a path? I hope it's this one. Nimeka bila ku hivo hivi, imekuja hivi, ikakuja hivo, ikakuja hivi, ikakuja hivo, ikakuja hivi, then finally ikakuja hivo. Sorry, and then I want to, yeah, good. So have you seen that move?
Yeah.
So an impulse, correction, impulse, correction, impulse, correction, impulse. So these levels, ukiangalia, if you take a Fibonacci tool, which will come in the next class, these are Fibonacci levels. Where's my Fibonacci tool? This is a Fibonacci level of 0.786. Now actually 0.786. That is one. You see how Fibonacci now in the next class it will come to nini, but nakwambia tu nisi confuse. I'm just showing you how it will make sense later. Ili kuja kwa 0.382. So all this nini is retracements, they happen with Fibonacci. So one of the importances of this class is it's gonna help you understand Fibonacci faster. So the 0.618, and then finally, yeah, 1, 2, 3. Kuna moja tumekosa kwenye nini, but umeona all this zime reverse at a fib level, si ndio? The other thing I wanted to tell you is this is a support, a resistance. It comes forming support and resistance. Support, resistance. Now, if I hide this, because I want to hide it, let me try to hide it. I want to hide it. Let me hide it. And then we go back now to look at it well. So this support level and then this resistance level, when it was forming itself right here, all I knew is there's an impulse and then it formed support. Sema tulikuwa tunaingililia hapa, and then I've come and seen, okay, I've created this line over here. I will not trade right now. Like I told you last time, you just come and draw a nini. It will be tested maybe in the near future. So hapa ndo ilikuja ikakuwa tested. So our trades will be based on this. Sawa? This other level here, it didn't, we are waiting for it to be tested. It will be tested in the near future, and it was a flip that happened. You see right here? So for example, I came and this level really to pair a support, a resistance level. So all I do is this candle that has created this support, this resistance, we call it red. Ama si lazima nikale saa hii juu ya time. We call it red. This nini, I want to see how price is gonna react. It has already formed here. So I want to see what is gonna happen when price comes back to this level. So I come now to the 15-minute time frame, because in my head is price is trying to create support and resistance level. So tukikuja back in time in the 15-minute time frame, we're gonna see some rejections happening at first, and then a flip will occur later. So for example, I got one trade because it's really happening hapa. So our trade would have been here. So the first trade would have been I got like one trade over here. So I normally wait for a nini to happen. So would have had tulikuwa na trade ya kwanza hapo, which would have
Hello,
been,
you're saying you normally wait for?
I normally wait for liquidity to be grabbed. So for example, this is liquidity hapa imekuwa grabbed. So ninge enter probably there. And then my stop loss will be here. It wouldn't be a good idea because the next stop loss will be right there. But it wouldn't be a good idea because sina swing point ingine. Swing point yenye ilikuwa next ilikuwa huko chini. So you see, the moment the first trade imefail, ninajua this nini is not a strong one. The uptrend is still in motion, because remember, to create resistance we are looking forward to look for sales, ndio? So trade ya kwanza ingekuwa imetolewa. Trade ya pili ningekuwa nayo ni hii. I would still have traded because it has grabbed this liquidity over here. So I put my stop loss there, and then my take profit, I would have put it in this swing low over here. There. Hata hii ingekuwa juu, unajua natafuta hii swing low. So swing low next ingekuwa hii, ingekuwa failed. Hii ingine ingekuwa hapa, so ninge add kidogo tu. So at least ikuwe 1:2 point something, but hata kama ingekuwa hapo ni sawa juu ningeanza kutrail at 1:2. So what happens is this one would have been successful. What else? There will be another one right here, because I'm waiting for a swing low to be taken. This one didn't end up taking it, so this one took this one. So ningechukua hii trade there. ningekuja niweke stop loss hapo, and then I would have targeted this swing point. Kwa akili yangu ninajua price itakuja hapo chini, but at least ilikuja almost 3/4 of it, so but still ningetolewa kwa hii trade, but ingekuwa imefikisha 1:2 risk reward yangu, so it will still be a successful trade. And then price starts going backwards, so another trade that I would have entered would have been this one, and it would have been a loss. Why? Because nitakuja tena niingie trade yangu hii sasa, tuna go off of a resistance. We are selling at resistance, buying at support. So trade yangu ingekuwa imetolewa very very soon right there. So small loss, 2 wins, 2 trades. So when I say this such an instance, in my mind I'm like, okay, this level is becoming weak. So at the back of my mind, I'm waiting for a flip, an SR flip, which happens right here. So unaona hii kando venye nilikuwa nakwambia volume. So ukitaka kujua volume, kuko na volume kwa market, hii candle huwa ina form, hii candle inakuja ina form, hii candle inakuja. So this shows volume. You can also switch on the volume indicator. So you just come to your indicators and add volume. So in this case, me, I don't use it. I just use my eyes, but you can use. So hapa kwa volume, utaona spike zimejaa hapo. So volume indicator, volume. So you just come, me I can't enter because you just come and get a volume indicator. Volume hapa chini zitakuwa zikijiform hapa. So basically, once you see a break, this is called a breakout. A breakout has occurred. This stops being a resistance now. It flips to become a support. I think I elaborated a little bit last class, but I won't now start trading at immediately I see a breakout. What I will do, I will wait for price to come back to this level and show me and give me a signal to enter. So I would have entered right here. So now my bias has shifted. I'm now looking for long positions, and then I go, which is the next level. When we look back, it should have been right here. Let me pull this upwards just a minute. And this, so right there at 27. So I come back and 2018, 27 there. So that's where my take profit would have been. And if we see in future, did it end up happening? Probably not. Let's see. Not yet. It didn't end up happening. But you see the point. So this gave us a risk reward of 1:3. And then one thing I need to note about, when I see a pin bar, I don't like taking it, my stop loss being all the way. I can push it a bit up, almost halfway, I'm at 3/4, so that because I know price won't, a pin buy is a good one because it will reject highly, so it improves my risk reward at least. And then it's like once it gets 1:2, najua price itaendelea kupanda. Did it end up coming back again? Let's see. Let's extend our support and resistance flip to the future. So yeah, that's basically how we trade support and resistance flip. So it shows according now to market structure, tutarudi kwa nini. Oh, actually our trade ended up happening in the future. It became successful. Yeah, but it took a long time. Okay, so we would have been, no, we were not stopped out. Okay, good. So yeah, basically that way. And you see price went up, went up, went up. Now I want us to go back to the 4-hour time frame so that we see how it played out. Because if market inaendanga ikiform new support and resistance levels, new support and resistance levels like that. If I can just make this one come back. But do you have any questions so far? Any more questions?
Not,
So,
not,
so
not, not, not necessarily, but I'm just fascinated to see that actually everything also applies to these pairs as well, crypto pairs.
yeah, everything applies. Alafu, I hope it won't be confusing for you. The thing is, you just need to understand market structure. So, for example, this level, this was support. This was, I want us to also to look at this support level, how it reacted, because market structure si tumesema nini? Higher high, higher low, higher high, higher low, higher low. It goes giving us that way. So every time price comes back to maybe this level, there will be a reaction happening. When price comes back to this level, there will be a reaction happening. When price comes back to this level in future, there will be reaction happening. You see, in this instance, when price came back to this level, there was reaction happening. So even in equal highs, equal lows, same case. Even in lower highs, lower lows, same case. So your job is knowing today is Thursday, 21st. What is market structure up to date? We see, sorry, in the 4 hour time frame, unasema we are having a downward trend. Why? Because market has been forming lower lows, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Now, can I see the levels that, can I see clearly the support and resistance levels that are forming these lower lows and lower highs? And can I draw the support and resistance zones? Yes, draw them. You come and draw them, right? After umeshazi draw, now drop into your time frame and start looking for trades when price comes to those levels. So for example here, tungekuwa na hii level iko hapa na hii level iko hapa juu. Hizi ndo zingetu direct right now until they are broken what to trade in this point in time. So today you won't ati hautakuwa ati sikuwa na trades leo, utakuwa na trades leo juu hizo levels ndo zinakudirect. Have I made sense?
Mm-hmm.
Aya, so I want us to see an example of this support level because I'm curious to see how price behaved. This lower low, higher low. This is a support level that formed kitambo kiasi. So we're gonna look for buys. So let's paint it green. So if I extend it, because it took days and days before it was reached. You see how it is acting as very strong support. So unaona hizi wicks, this rejection wicks. So it means time yetu inaenda kuisha. So it means this level is very strong. So if we go back to our time frame, which is for 4 hour, remember ni 15-minute time frame. So unakuja ndo hii hapa. You see how we are getting very clean moves. For example, this week I told you if you see a very bullish, a very nini, it may not make sense to enter such a trade, but it's still okay if you want to enter, although unajua itakuwa tu ka loss kwako. So risk reward, stop loss ndio ina drivingi, unafaa kukudrive kujua how much you're gonna make. So you're gonna take the trade. So in this case, I would have put my stop loss there. So my first trade, imetupia 1:4. Hii tungekuwa taken out hapo. But you see price came to our, ilikuja almost 3/4 to our trade. Ni venye hii risk reward ilikuwa ndogo 1:2.4. But even if it was a loss, I would have had another trade, which is this. So I would have still taken my stop loss there. Stop loss would be there. Maybe my take profit because lazima ikuwe 2, it would have been there. Sorry. In this level, am I even this level? The next one, for which this would have been long, but it's okay. Once price gets to 1:2, I'm always booking profits starting from there. You see, this would have been a successful trade. This is another one. Price comes, it gives us a doji. This is it is a plus doji, long-legged doji in a plus. Imetupea hapo, stop loss yetu iko somewhere there, and then our take profit is somewhere there. Haya, now this one, stop loss yetu after this kadoji inaweza kosa kukua hit cause tumeacha ka allowance tu kadogo. Hata kama ingekuwa tu hapo inge front run, of which pia tungekuwa taken out maybe, but normally wanasema one point I need to tell you, ukiweka stop loss usiweke stop loss immediately. Siekangi stop loss yangu immediately, nangojanga candle moja ifunge, like hiyo candle yenye nimeingililia, si hiyo candle yenye naekanga stop loss. I normally put it's something that you'll have to teach yourself in psychology, but I normally don't put personally. Even I won't have the time because also I want my nini to have a breathing room. But in this case, if I put it exactly, it would have been stopped out. But in this case, I normally give it an allowance. But me personally, what I normally do is I wait for the first candle to close. Ndio nisikuwe liquidated, of which it works out against me most times because I can lose so much money at the same time. So haifai kuwa hapo, inafaa kuwa somewhere there at this previous nini. So my profit would have been booked there of 1:4, and then price came now. Sasa price inakuja tena sahi, so ikikuja sahi tuone reaction, chances are itakuja break shop. Ikibreak, form a big candle like this down here, I won't be interested in entering that trade. I will wait for price to now come back. So itakuje and then say ikikuja hapa now, I will look now for sales because I know this is an SR flip. Have I made sense?
And is it correct to also say that the SR flip is also a confirmation of a good retracement?
Yeah. It's yes. If it goes, if you take it, which it's hard, you can take it back up. For example, if it goes down, let me take that arrow again. I hope I've understood your question, but let me try to answer you just a moment. So if say price comes down, it comes like this down, and then you're saying if you can take a retracement like that, and then it goes down now like that. Is that what you're meaning? Sorry.
Yeah, I'm saying for the SR flip, is it also a type of a retracement?
No. It's a breakout.
Oh, those are two different things. Flips, breakouts are different from
A breakout.
retracements.
A breakout is something like this. Sorry. A breakout is something like this. Price comes and it breaks up. It breaks out. A retracement is something like, sorry, let me take it again. A retracement now is something like this. So a correction. So once price has come like that, this is now the retrace. Okay, this section kuanzia hapa hadi hapa ni correction ama retracement ama pullback. So whatever you trade there, you say I've traded a retracement. So I've traded this retracement. So there are traders who normally come and trade from here. Once they get a signal to buy, they will buy up to here. So their target is for price to come here. But I told you, like I told you in the notes, it is detrimental to you because chances are you won't get a good risk reward. So it's better for you to wait and trade this way instead of trading now this way. Have I answered you? So a breakout,
Yes.
this is not the breakout, and then this is the retracement. But when you are trading that retracement, you will be entering now like this and then riding this impulse move. So when you are naming them, this is called an impulse, a correction, a retracement, and then impulse. So if you are supposed to call this impulse, it could have been a breakout, retracement or correction, a pullback, and then impulse slash breakout, because it will be breaking out this level. But we don't say breakout because we are not sure if it's gonna break out or not. So a breakout happens once something like that has happened. Let me show you an example of a breakout.
So before you move, so now around that place now, is that where you also say it's a flip has happened?
Yes, a flip has happened. Once the breakout occurs, we say this, because you remember it's coming all the way down to take out this swing low. So once it
Yeah.
successfully closes and forms a bullish candle below this swing low, we are like, oh, market has already created, because it's going to create a new swing low now. But the swing low, the nature of the swing low, it shouldn't be a rejection like this week's here. It should be a bullish candle closing below. For example, this one, a bullish candle for closed above this swing high. So you see this bullish candle which closed, it gave us a signal of a breakout, and then it came and retraced. It formed a correction, a pullback, and then it still went up. Hapa ilienda ikaform a higher high. So this is another example of equal highs and equal lows, but you see it still went upwards and continued going upwards. Have I made sense?
Mhm.
So when you go to the higher time frame, you're gonna see, like for example, the 4 hour. Let me not confuse you. So you see in the 4 hour, it came this bullish candle ilikuja kwenye ilikuwa imestopia hapa, but ilikuja ikaenda all the way up, and then sasa in the higher time frame now we can see, like for example, this is a good Fibonacci retracement, ama this is now a retracement in this downward trend. This is a impulse move. This is now a correction. So another impulse move. Chances are price will go and create a new low here. So traders who are trading this move, they're gonna sell and target these lows below this point. So they can take their profit here, ama it trades, but price is gonna create a new low. Have I answered you? Should
Sawa
should
sawa.
Should we create a small meeting to briefly conclude? Ama, you're good.
Sawa. Yeah.
Okay.
No. We conclude. I'm saying we didn't conclude the notes, so we can conclude on the notes, no?
Yeah, but it has made sense. Kila kitu ime make sense so far. Kitu itakuwa challenging ni tu hiyo put two and two together, but once you have mastered like identifying market structure, you ushajua support and resistance, I think it will be easier for you. Before I continue, do you have any questions?
Nope, as of now.
Okay, so can I ask you to share your screen? Are you confident enough so that I see if you've understood market structure? Ama I just explained to you further.
Okay, I can share my screen. Just give me a second.
Rehema,
Yes. So I'm loading my screen. Let's see.
you can pick any pair that you think is good.
Okay.
Just click on it. Your view up to click. Hide it here. Okay. You can leave fractals.
Let me pick another pair.
Mm.
Wait, how do I remove this? Oh, no, I can't. Oh, no, it's the price moving. Sorry.
Mm.
So I'm beginning to think I should change to light screen like yours, not dark. Okay, so we were in uptrend. So over here we're on an uptrend. Hi, hello. 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 And then it the direction changed. The trend, the market changed. So now you you can see it's going down like that. So we are now on a downtrend. Now I'll be looking at where the break happened. So if this was the previous low, what line? Let me for the line. Let's see. Should I use this one? Okay, so I'll put this. Or no, sorry. So I'll look at the previous resistance. So this was the previous resistance, and it was broken. So it created a new support level. Okay. So so it was broken, and then let me see. I need to copy this. I'm using my laptop mouse. My other mouse is not doing well. Okay. So that was broken, and then this is where the market, sorry. So this is where the reversal happened. So and then the direction was changing from here. So now we're waiting to see whether it's going to go back up. It came back to this uh, previous high over here, ikabreak kidogo, ikarudi juu, ikaretrace, ikapull back hapo, and then ikapull back hapo, and then it went down again and it broke this level hapo kabisa, ikatoka kabisa. This breakout happened here. So when this breakout happened here, and then I saw, you see this doji forming here, you wait for it to trace back kuona kama itarudi in that area, which it did. Ika reject tena, and then now it gives a signal to enter. You have all these candles giving you signals that the market is now on a downward trend. I'll also be looking at a previous high. I got that correct. A previous high was somewhere here.
Mm-hmm.
here.
Mm-hmm.
So um so this area here looks interesting over here.
Mm-hmm.
This area here looks interesting for me.
Mm-hmm.
So I come to 15 minutes
Mm-hmm.
and I have, and then I look for it. Sorry. So I'm looking at this area, right?
Mm-hmm.
It's the area I'm looking at.
Mm-hmm.
And yeah, so now for a 15 minutes chat,
Mm-hmm.
um yeah, so when the price, or rather when the market came down
Mm-hmm.
to this level,
Mm-hmm.
um when it broke off and came to this level, so I'll wait to see whether it's going to come back here to test this level again,
Mm-hmm.
which it did.
Mm-hmm.
And then the confirmation I have is this complete, this kind of here and this breakdown over here. And then I can place a sell targeting my take profit somewhere here.
Yeah. Okay.
And then when all is good, maybe I can call it a day, be satisfied with 1 shilling, and then
Mm.
or I stay around. But um, at least that's how I'm seeing it right now.
Okay. So I thank you. Thank you. You've done a good job. You've understood so much. I think there's something I need to add I had not mentioned. The important support and resistance to focus on. To focus. I'm writing so that I add it in the note. To focus on in market structure. Market structure. Okay, so let me show you. Let me share my screen. I might use you as we'll go back to the 4 hour. First of all, go to the 4 hour time frame. Okay, good. So go back to the recent areas you are labeling your support and resistance levels. Just zoom
Sorry.
just zoom out. Yani like imake ikwe ikaribia hiyo side ya afu niletee ikwe karibu. Ni juu nina struggle kuona. I'm
Oh, no
struggling.
problem.
Yeah. So now I need to clarify the I think the fractal indicator is gonna confuse you, but let me just explain using it. You see, you need for a higher high and higher low to be successful, and lower high
Mhm.
lower low to be successful. It has to be broken for it to be. So when you're going to draw your support and resistance levels, don't draw just any that you're seeing the the fractal giving you. Sawa. So I would
Mhm.
advise that you use one that has broken. So for example, in an uptrend, once you have a higher high, afu imebrekiwa na a new higher high, so you need to point those levels like higher high, higher high. Kama ni lower low, andika lower low. So utazilabel ukijua hizo ndo levels zenye utakuwa unangoja price ikuje. So let me share my screen so that it will be easier to explain to you. Let me share my screen. Okay, so we're in the 4 hour time frame. So you see, this level here, this level was let's hide all this. Let's remove this. Higher. Let me just get a clean chart. Good. Let me check a clean chart. So you see in this trend, this is a consolidating trend. So, and it's working in real time. So I'm gonna wait for a significant, like for example, good, like here we see we have so many rejection candles. So utakuwa kwa akili yako ni gani sasa hapa ni lower low, sasa hapa ni gani lower low, but lower low yenye hapa tunafaa kufocus nayo, can you guess it is which one? If I just put you on the spot, can you guess?
The lower low we should be focusing on.
Yes, because remember we have broken. So
The
remember, this is
the mhm.
mhm. So this is a
Okay. Oh,
this is a higher high, higher low, higher high, because it has broken this and this, higher high, or rather higher high this one, and higher low, and then higher high, but this one qualifies to be a higher high, and then higher, we are looking now for a higher low. But then when we are looking at price in real time, tungekuwa hapa, tungekuwa tuna focus on which one between this and this. Tungekuwa is it at hii 1, 2 and 3. Between 1, 2 and 3, which one would be the focus of this point in time? Ndio we look at the most, because the challenge here is picking the right support and resistance. Ama picking the right higher lows, ama lower lows to be broken. So for in this wacha tu nikujibu, and then I'll ask you another one. In this point in time, I would have picked this one number 1. Unaona hii hapa? So swing
okay.
higher high, higher low, higher high, higher low, higher high. And then I wait for this one to be broken. So I come and label it there. Because remember there are 3 of them, 1, 2 and 3. I don't know which one is important, but I know the one that was formed. Sorry, the one that was formed by the previous higher high, which was this one was higher high, higher low, higher high. So the one that formed this impulse move. So impulse correction, impulse correction. This one is the most important. And then this one up here is next. It could have been this one, yes, but it could henge quite important in real time. So I would have waited for this one to be broken. Now I come and look
Uh-huh.
at things. So first of all, you need to note the higher high. The higher high that forms the higher low is the one that you need to focus on, and vice versa. The higher high that breaks the previous higher high. So unaenda ukiangalia breaks in swing high, swing low, swing. So unaenda kama staircase hivyo unaenda tuna staircase ile yenye imeform, hiyo ndio una focus. So in this case, this is the resistance I would have focused on. In this case, this is the resistance I would focus on. You see it is reacting. Hata ukiangalia in future, it is reacting just exactly that way. This is the support I would have focused on. And then this is the reversal now of this structure that I would have focused on. So the good thing about this is kazi yako tu ni kuja kuangalia juu ushapewa tu na market. So kazi yako ni kuangalia ni gani imekaribia, and then after it has played out, yenye unaona nini imeplay out imeisha, unaenda ukifuta as much as structure changes. So ukiona structure isha flip kabisa, you delete all of them, you go creating new ones. For example, this is now the structure that also reversed, and it's also the one that I'm gonna focus on. So for example, this one formed, okay, so acha nisi confused any further.
No,
So
no, it's okay. I'm following.
okay, so for example, right here, now we got a higher high, and then price came and flipped this market. Now once it flipped, and took this support. So once it did that, you can see in point because ilichukuliwa na hii candle, this big bearish candle. You see we had an opportunity here to sell. We had several opportunities to sell. So, but then this is not now, okay, so price is acting, it is behaving accordingly at this point in time. And then you never know what price is going to do. So you have to be very critical and wait for your setups to form. Now, something interesting is happening here. This point I'm pointing right now, could be a lower low, because remember, it formed a higher high, and then instead of forming a higher low somewhere here, it continued downwards and formed a higher low, so a lower low. Now this lower low, it played, it consolidated, and then it came and formed a new lower low right here. So between this and this, so I will be focusing on this new lower low. I come now, I create my lower low right there. And you see, if we plot it in time, we see it's rejected once, twice, and a third time, and also another, but this one I'm not so sure. But you see, it is important. So it gave us like 2-3 more trades in future. So this is what I was telling you. And then it came and formed. So chart yetu itaenda kichafuka. So what we do, we go deleting. For example, this point, we retain this bullish point up here. I would retain this an untested level. So for example, I will go now looking for, ndio pia chart yako isikae too much, you go deleting some of the levels, especially those which have not been tested yet. One of them that has not been tested is this one down here. This one has already been tested in future right now. We can leave it also. This one has already been tested several times. So this one we can now remove it. And then this one has not yet been tested. We leave it. This one has been tested several times, of which we can leave it because you see it has come again to be tested again. So until this moves end, for example, price ikuja huku chini kabisa, ndio nafaa kutoa hizi levels. Sasa tuseme price ipande huku juu kabisa, ndo natoa hizi levels zenye ziko chini, ama you just retain the important ones, because you'll come and see like a chart will have so many things. So this is a level, this is another level which is similar to this, of which it's okay, which you see it makes a point. This is another level. So wewe utaenda tu ukiangalia the important levels like that. Have I made sense? So you just need to, I know it looks dirty, but now ukikuja kwa 15 minute time frame, you'll just see level, you'll see them like this. You see it's better. But in the 1 hour zinakaa nikaa unachafua chart yako, but when you go to the lower time frame, it simplifies everything because you see price is ranging in this area. So this is tradable now. But ukiangalia kwa 4 hour, okay, hauko confused because unajua hizi ni levels gani, but now go removing your levels. And then when they become even more and more, it will be interesting to see how they react off of each other. So that's another advantage. You'll be getting many more trades. So hapa ndo napatanga mtu hata hana haja ku trade more than one candle. One chart is enough. One pair is enough. So utapata mtu juu will get so many opportunities because of these levels. Price ikikuja, because you see ilikuja hapa ikabounce, ikakuja hapa ikabounce. But where at the back of your mind, you know, hey, market structure is going this and this and this way. Yeah, so I hope I've answered you. Have I confused you further?
I need that. You've actually just added more to my homework, more to my practice, the
It's
things I
quite,
need to be looking out for.
yeah, it's so much practice. But the thing is, once you understand market structure, it will be so easy. Yani utaweza kuflow tu, kazi yako tu itakuwa kujua na identify your market structure, because it's not meant to confuse you, by the way. It's not meant to confuse you at all. It's just it's just meant to simplify your job. And I wish, because The reason why we like adding it is for you to see the direction of price. So for example, price has been consolidating in this area. So chances are it may continue consolidating for a while. But if you told somebody a layman, I talk like, "Hi, what do you even mean?" But you see, you can see clearly it is forming what? Higher highs and higher lows. Because why? Hapa sorry, it is forming equal highs and equal lows because this is a high and this is a high. It rejected there, so this is an equal high, so this is a low, so
Yeah.
chances are it will come and bounce off of this, so you
Yeah.
already know, okay, according to market structure, this is what is happening. In the bigger perspective, we are seeing that price is coming and forming lower lows. So again, this is a downtrend in itself. So the reason why I'm saying it is likely going to come here and bounce off of it is because it's definitely coming down because we are still in a downtrend. And then chances are, I'm not so sure, it's my speculation, price is gonna do what? It's gonna go down further to form what? A lower. If it's not gonna bounce off of this, it may bounce off kidogo ama in its entirety to here and then it comes back down again either. So itakuja sasa, ikisha form ka consolidation itakuwa like yenyewe siko sure kama itakuja chini, so chances are now it will reverse upwards. So that is one of the instances when you see this an indecision like this, like chances are we are not sure, there's indecision in the market. But not to confuse you, the reason why it won't confuse you is when you go to the lower time frame now to look at your entries, your job is now to wait. For example, here I would have bought, here I would have sold. When it comes here, I will buy. I look for a buy signal, I enter. And same case when it goes down, I will evo too. Simplify.
Yeah.
Yeah. So if you're a swing trader, you just like, cause 15 minutes it may take a while. But unachukua one trade in a day, unapata your risk reward, of which it gives you better risk reward like 1:3. So tuseme ulikuwa ume risk $100 ama $10, unapata 3 times of that. So another setup, maybe you go to another pair like USD JPY, you get another one, and then you go to another one, you get another one. Tuseme moja ifail, so utakuwa umerisk 1% to get 3 times 2, 6 minus 1. Tuseme one of them is a loss, you get 5. At the end of the day, you've made 5% in that day. So no.
Yeah.
Yeah. So like for example, this trade we were saying it definitely market structure inatuambia it's a downward trend. You see price is going downward alafu aggressively. Okay, I know this is the lower time frame, but let me explain to you shift ama markets market or inaitwaje, so a breakout. Let me explain to you a breakout. Let me just make a small, so this one I will have to paint it a different color ndio isiku confuse. Let's paint it maybe color orange. So let's see the breakout. You see how a breakout would be, price will come. You see this volume. Okay, I was to show you a candle that shows there's so much volume and momentum. It's normally bold. It's a very bold candle, but the huku chini kuna kwanga na tu volume indicator. There's a volume indicator huku chini. You can see all the volumes happening right here down. So ikikuja hivi chini ikuja alafu this candle iclose huku chini, because chances are it can either do aka weak ikuje i-reject off of this level shup huku juu ama pia ikuje ipite huku chini. So two things can happen. So once it is downwards, this is a breakout. So our goal is a breakout. Once a breakout happens, what I will look to see is, let me take this one. I will look for it to go down. It breaks out, and then some traders will trade this retrace. They will trade this impulse, like what I buy upwards to this level, and then it goes, and then they take it back down now. Sorry, we need a new arrow. and then they trade. So there's someone who will trade like this, ama another one will trade like this when they get a signal. Where is that thing? And then they trade like this now. So there'll be so let me just anyway, Rehema, utaniambia if
Yeah,
you have any other question. So yeah,
sawa.
that. So there's a trader who's gonna, once they get a breakout, they will draw, they will take a new trade upwards like that. And then another one will come and trade this retracement downward. So when I say they will trade this retracement, they will take their Fibonacci retracement tool, they draw from left to right, and I'm introducing to you Fibonacci retracement. So they will wait for price to come and reject. So at this level 0.236, and at this support level, you see there's confluence, they're almost at the same level. So this is called confluence. Hii imeshikana na a Fibonacci level. So we have two things that make it a strong confirmation for us to enter. So there's somebody who will come and enter a trade there. So they will put their stop loss around there and there. It depends. And then their take profit now will be 1:2. Let's give it 1:2, amount is to 2.5. So their trade will be like, you see, Simona, hiyo kando venye imereject hivyo. Let me
Mm.
remove this and this one. So
Hiyo
yeah.
volume ni nyingi. Kuna news.
Kuna new size, leo ni Thursday. Ni one.
Naangalia hiyo symbol iko hapo chini.
Okay. So let's go. Hebu niangalie Forex Factory ni news gani hiyo. But you see now what I mean by a breakout. So a breakout normally happens like that. So you may not have time to wait for it to close, but let me look at Forex Factory. Leo kulikuwa kukuwa na unemployment claims zinafaa kuwa at 3 p.m. So labda sahii market inamalizia kenye ilikuwa inafanya, ndio sasa ijiadjust. There's FOMC semi 2 to 3, yeah, at 2. So unemployment claims are 3:30, and then flash PMI at 4. So leo it's a heavy day for news. So we'll see, tutaona vitu kwa mingi leo. Yeah, so time is running out again. Okay, so any questions, any comments? Let's find out. I hope you've understood, but there's you can do. I will do a YouTube. I was planning to do a YouTube video for this one for market structure. I think I will add any, in case you have any questions, you can just tell me, and then I will look at them. But do you see how market structure makes your life simple? Although it seems like it's gonna make your life harder, but at least unakuwa na sense like, okay, this is what's gonna happen.
I'm tempted to ask whether there are but there's a different type of candlestick or something that one can be switching in between, sort of like help look at market structure better, um or you suggest we stick to this kawaida kind of.
No, me, I don't know. I don't know of any, because
Mm-hmm.
I don't know. I just use this. The thing is, it's hard work to understand and to go for it. Okay, let me put it this way. The simple part is support and resistance. You should adjust support and resistance and your entries in lower time frame. That's it. Your hard work will be identifying market structure and drawing those lines and ensuring those lines are going according to the trend. Hivyo tu. So the hard work hapo because I tried my best to simplify the previous class support and resistance. So hapa ndio itakuwa kazi kwako. know and learn how to how to map up your trends. Higher high, higher low, higher high, higher low, lower high, lower low, lower high, lower low, equal highs, equal
Mhm.
lows, equal highs, equal. Hapo remember price is going, so haitakupea chance at ya ku look back, like haitakupea chance ya ku isha happen. So we kazi yako itakuwa okay, nini a level formed previously ikifika at this level, let me see the reaction, enter. Sawa sawa. So hiyo tu ndio itakuwa the hard work, of which it's not hard work once you are used to it, it will be so smooth. Yeah, so I would encourage you to use this and don't give up on this strategy, the three of them. You can choose to just use support and resistance, but add on if you want to have higher probability, add market structure on it. It will help. So hivyo tunaweza kuambia, but there's nothing I'm using at the moment to help me with market structure. Maybe kunayo, ni venye sijaipatana nayo, but I wish I had. Hata mi natafuta kitu itani simplify. But what's
Watu wa AI mnafaa kutengeneza.
eh, ile kazi iko, mi kwanza niko na vitu mingi ziko kwa bucket list nashindwa, and the year is almost ending and I've not yet even finished even half of them. I'm like, but yeah. So if it comes up maybe next year, because it's not easy by the way. Hata kama ni programming these things, it's not that easy. They take time. Like one program can take even 3 months, because you have to test it. Your peer is identify the wrong ones, and then you have to tell
Mhm.
it from scratch. You have to tell it, okay, I need you to go and look for candles that behave like this. Now, once that candle
Mhm.
closes this below, like good, you see this candle has closed. This is a perfect
Mhm.
breakout candle. So unaona imeenda with so much
Mhm.
movement hadi wicks zake zimeclose, so ime take out this one completely. So the information it's telling us right now is we are in a downtrend, because it has broken this lower, this previous lower,
Low,
lower.
previous low, low.
Yeah,
Mhm.
so the downtrend is still in action. So target zetu zitakuwa wapi? Huku chini.
Go chini, yeah.
So kwenye to the next level iko, so chances are price can go all the way. So hapa ndo so unapatanga watu wanasema sniper entry. So kwenye itajifomia huku, you see a very good risk reward
Mhm.
ya 1:1 nini. So this is now what it's called a sniper. But hiyo ni kucomplicate life yako, because it's not this simple. You have to work hard for it. So what I normally suggest to someone is go and nini, go to the, chukua ile profit wewe unaona, because you'll have so many opportunities at the end of the day. But sasa unaona hii level tulikuwa na nini, hii level ni ya market structure, hii level ni ya market structure, although ni still resistance and support, but we are given by it by market structure. So they give us our target, because chances are price will come all the way there. So yeah, basically that. So in case price ikose kukuja, which I doubt, because inaweza kosa kukuja back up here, it can fail to come back up here, anything can happen. So unaweza kosa inaweza kosa kukuja to your level. So what we normally do is you just be patient, wait for it to come, because ikikuja tu. So I forgot to tell you, in this level you're supposed to put an alert. One way is ndo usishindange sasa kwa nini, usishindane kwa
Chat.
ukingojea. So you just come, set an alert. You can put price ama horizontal ray. When price comes to that horizontal ray, and then you create. So time ikikuja imefail juu ya nini, price ikikuja ina ring tu. Want to trigger expiration.
Ama ulikuwa ushawaiweka alert?
Niko na alert ingine, so I don't know, but you get the point. You can just come and put your alert, and then it alerts you, and price comes back to that level, and then quickly you just enter your trade. I think niko na alerts kadhaa zenye zinani block na nafaa kuzitoa. So hapa ndio sasa ukitaka ku upgrade unaweza upgrade sasa, because it doesn't give you those limitations, because you may have an alert for gold, you may have for BTC, you may have for USD JPY, you may have like for 5, and you see you can just have like a limited number of alerts. So that's why now people start now looking for a way to but me I've never needed to upgrade. So yeah.
Mm. Oh, you've never needed to upgrade. That's interesting. I used to think the more you upgrade, or the people who upgrade are exposed to a lot more opportunities.
No, it depends. It depends with meaning, with how much you're using, because you can upgrade and you don't use you can upgrade for just an alert. You see, it doesn't need, because me I don't need any other indicator, because the only reason to upgrade is either you need more indicators, maybe you need to look to do back testing of going like venye nilikuwa nakwambia nataka kuna venye price ita behave from to replay from there, but you see I can't. But if I go to the daily, I can very well backtest. Sorry, I can very well replay. So if I go here, sorry, if I go here, I can replay. You see, I can replay and do the backtest and all that. But if you want to do it now in the lower time frame, you can't. You have to buy the premium version. That is one. The other one is alerts and all those two small things. So me, I don't need them per se, because me, I just come. I come looking at price, and then if I have one alert, it's
Mhm.
okay for me. So, and then
Not
nakwanga too so much into my work, I even forget, and I don't trade so much. I just follow gold. So gold, because my
we have
algo.
less than 1 minute.
Oh yeah. So my algo,
Sorry.
yeah. Sorry. So the algos normally, because I'm looking at them all the time, I know, so I don't need for the. And then the alerts that I have already, they're enough, like 3, 4 of them. Yeah. Okay, parting shot.
In short, I mean, this was a great class. Naona niko na assignment mingi hata kama hujanipea
Mm-hmm.
directly. Uh, I see I need to put a lot more effort. But thanks for sharing all the knowledge. Kwenye notes you'll share with me.
Sawa sawa, tutatengeza midterm after maybe the next class.